Hello! Today we are going to be talking about payroll liabilities. But before we get into a problem, I want to talk about this graphic that I've created. If you are an employee working for a company, in any given period you're going to make some amount of money, let's say 10 coins in this example. We call this your gross pay. But you don't get to keep all 10 coins, because there are various deductions that are going to take away from your gross pay. We need to subtract all the deductions, which include federal income taxes to the United States government, state and local income taxes to the state you reside in, as well as your city if applicable, Fica taxes, which stand for Federal Insurance Contributions Act, and are split into Social Security, which help provide retirement and disability payments, and Medicare, which provides health care for those who qualify, and voluntary or other deductions, which can include deductions like union dues, charitable givings, or insurance premiums. Now here I've represented each deduction as one coin, but in reality each would be different. Anyways, if we take the gross pay of 10 coins and subtract all the deductions, which total to 5 coins, we get the net pay, otherwise known as the take-home pay, which is 5 coins. So everything you see here are deductions that come from an employee's paycheck. The employer, meaning the company or business you are working for, also must pay a few taxes on your behalf, which we call payroll taxes. These include the Fica, Social Security, and Medicare taxes again. The employer simply matches whatever the employee pays. The employer also pays unemployment taxes. Now, there are two forms of unemployment taxes that the employer will pay, and they are called FUTA and SUTA, which stand for Federal and State Unemployment Tax Acts. These taxes essentially provide unemployment benefits for individuals who have lost their jobs. So the important things to remember are that the employee will always have various deductions taken from their paycheck, which include federal, state, and local income taxes, FICA, Social Security, and Medicare taxes, as well as voluntary and other deductions. And the employer will have a few taxes on the employee's behalf, typically including a FICA, Social Security, and Medicare tax again, as well as state and federal unemployment taxes. Now that we've introduced payroll liabilities, let's look at a problem. So the instructions say, prepare the journal entry to record the payment of the payroll for the week ended July 22nd. And this is the journal entry for the employee's deductions. And we also have to prepare the journal entry to record the accrual of the payroll taxes for the week ended July 22nd. And this is for the employer side. So before we can do the journal entries, we're going to have to do some calculations, which we're going to do in this chart here. So we can see that for the current week of July 16th through July 22nd, we were given that this company has 3 employees, Brian, Luke, and Jake. And we are given their year-to-date earnings up until this current week, which is July 15, where they made these 3 different amounts. Now Luke didn't make quite as much as Brian or Jake. Maybe that's because he's a new employee, or maybe his salary is just lower. Not sure, because we are not told here. Then we have the gross pay this period, which, just to simplify things, is $1,000 for each of the 3 employees. Then we also are given the federal income tax withholding and the state income tax withholding for each of the 3 employees. Now these could be calculated, but it's kind of a complicated process and something that you are most likely not going to be doing in your accounting class. And as for the remaining taxes, we will be calculating the amount for those. So we have the FICA Social Security, the FICA Medicare, the state unemployment, and then the federal unemployment taxes. So you'll notice over here that we are given the tax rates for each of these 4 taxes that we're going to need to calculate. And there's also a threshold for each tax rate. So the threshold means that once the employee makes this amount of money, they no longer have to pay any additional taxes on that type of tax. So for example, FICA Social Security has a threshold of $106,800. So if you have an employee who makes more than this, we are not going to tax him anymore. And FICA Medicare does not have a threshold, although if you get into the details, there actually is an additional tax if the employee makes over $200,000, but we're not going to have to worry about that in this example. And then the state and the federal unemployment taxes both have limits of $7,000. So the process we're going to use here is we're going to calculate the tax in 2 steps. First, we are going to find the taxable portion of the gross pay. So that's going to be a maximum of $1,000, but it could be less depending on the threshold, and I'll show you how we'll do that in a second. And once we found the taxable portion, then we're going to calculate the tax amount in each case using the rates over here on the right. So first, let's think about the FICA Social Security taxable portion for each employee. So we have Brian here who made $110,000 in the period up until this current week. Now we know that the FICA Social Security threshold is $106,800. Well, that means that Brian has already made more than the threshold for FICA Social Security since his income is over $106,800. So therefore, we're not going to tax him anymore. He's already paid all of his taxes based on the Social Security. So therefore, the FICA Social Security taxable portion is going to be $0. Now when we move to Luke, we see that he's only made $6,900 up until this current pay period. So he's nowhere near the threshold of $106,800. So that means the entire portion of his gross pay is going to be subject to tax. So the taxable portion is going to be the entire $1,000. Now Jake's situation is a little bit more complicated because right now, before the current period, he has made $106,200, which is just below the threshold of $106,800. And we'll notice that he made $1,000 this period, which is going to bring him above the threshold, right? Because if we take $106,200 and we add his current period pay, we're going to be at $107,200, and that's more than $106,800. So if you have that case where the year-to-date earnings plus the gross pay exceeds the threshold, the question you have to ask yourself is, well, how much more money did Jake have to make until he hit the threshold? Well, the way you can find that is you can take the threshold and you can subtract his year-to-date earnings. So if you take $106,800 and you subtract $106,200, you're going to get $600. And that is going to be the taxable portion of his income. And if you think about it, that kind of makes sense. He had $106,200 of earnings year to date, and if he makes $600 more, he's going to hit the threshold, so that's going to be the taxable portion. Next, we can calculate the tax amount by multiplying the taxable portion for each employee by the tax rate, which is 6.2%. So since Brian had $0 for his taxable portion, his Social Security tax amount is also going to be $0. We don't really need to do that calculation. And for Luke, since he has $1,000 that is taxable, we can take the $1,000 and we can multiply that by the 6.2%, or 0.062 if you were typing into a calculator for the decimal form. And that gives us $62 of tax for Luke based on his Social Security. Now for Jake, we're going to do a similar process. We're going to take $600 and we're going to multiply by 6.2% to get his tax amount of $37.20. Now for Medicare, we can see that there is no threshold for the purposes of this problem. So if there's no threshold, you can simply take the gross pay for this period, and that's going to act as your taxable portion for all three employees. Now for the tax amount, you're simply going to take the taxable portion and multiply that by the tax rate. And it'll be the same process for all three employees, which should get you $14.50 for the taxable amount for Medicare for Brian, Luke, and Jake. So the state and federal unemployment taxes each have a threshold of $7,000. So in some ways, this is going to be treated similar to the FICA Social Security tax, which had a threshold of $106,800. So what I want you to do now is to pause the video and see if you can come up with the answers for the last four rows of this table. Alright, we are back with the last four rows of the table. So let's just talk about the taxable portion in each case first. We can see that both Brian and Jake have $0 and Luke has $100 for each tax. And the reason is that the threshold for both state and federal unemployment taxes is $7,000. And Brian and Jake have made well over $7,000 prior to this date. So we don't have to tax them anymore for state or federal unemployment taxes. Whereas with Luke, he's made $6,900 prior to this date, and he's going to make an additional $1,000, which is going to put him over the threshold of $7,000. So the question we have to ask is, how much more did he have to make to hit the threshold? And that's $100. He had to make $100 until he hit $7,000. So that is why the taxable portion in each case for Luke is $100. Then, of course, to find the tax amount, all you have to do is take the $100 and multiply that by the relative tax, which for the case of SUTA is 5.4%, And for the Fuda, that is 0.6%. So make sure you don't get confused with your decibels here. This is 0.054 if you were to type this into your calculator, and this is 0.006 if you were to type this one into your calculator. Now the next thing you're going to want to do is to total up all of the different rows. So for example, for the gross pay this period, you can take 1,000 plus 1,000 plus 1,000 to get a total gross pay of $3,000. Or for the federal income tax withholding, take 250 plus 50 plus 200 to get $500. And you can do that same process for the other rows to get all these different numbers. Now some of these we don't actually need to know the totals, so I'm just going to X those out. For example, I've already got the year-to-date earnings through 7/15 X'd out because it doesn't really make sense to have that total. We also don't really need to have the taxable portion total, so I'm going to X those out really quick. And once we've done that, we should have all of the needed information for the journal entries. So now let's pull out our journal paper here. And we are asked to prepare the journal entry to record the payment of the payroll for the week ended July 22nd. And this is the journal entry for the employee deductions. And you might remember that the employee deductions are going to include the federal income tax, state and local income tax, FICA, Social Security, and Medicare, as well as voluntary or other deductions. So that's what we're going to be looking for here for this journal entry. Alright, the way we're going to do this journal entry is we are going to debit the wages expense account, and that's going to be the total of the gross pay. So the total of the gross pay is $3,000. So we're going to debit our wages expense for $3,000. Next, we can look for all of the different deductions from the employee's paycheck. The first of which is going to be the federal income tax. And the total for that is $500. So we're going to use the federal income tax payable account for the total of $500. And the reason this is a payable account is because the company is not going to pay it right away, right? So until that's paid, it's going to be a payable. And that's going to be the case for each of these different withholdings. Next, we have the state income tax withholding, which is $120. So this is going to be state income tax payable for $120. Next, we have the FICA Social Security tax, which is $99.20. So this is FICA Social Security tax payable for $99.20. And then finally we have the FICA Medicare, which is for $43.50. So this is FICA Medicare tax payable, and that's for $43.50. You can correct that typo. Now we have one more account, which is going to either be the wages payable account or it's going to be cash. Now it would be cash if we knew that the employees were being paid on this date, but nowhere in the problem do we see that the employers were paid on 7/22. So we're just going to use the wages payable account, assuming that they're going to be paid relatively soon, maybe in the next week or maybe in the next few days. And how much are we going to be paying the employee? Well, we're going to be paying the employee the amount of the net pay, meaning the gross pay minus all of the deductions, which equals the net pay. So the wages payable is going to be the gross pay, which is $3,000, minus all of the deductions, which are all of these numbers right here. And that gives us a wages payable amount of $2,237.30. So finally, we have to prepare the journal entry to record the accrual of the payroll taxes for the week ended July 22nd. And this is the employer journal entry. So you should remember that the employer is going to contribute the Social Security, Medicare, the state unemployment, and the federal unemployment taxes. And those are the ones we're going to be using in this journal entry. So what we do is we use the Payroll Tax Expense. And this is going to be the total of all of those taxes. So we're going to leave that until we have all the taxes laid out. So next time we're going to go to the FICA, Social Security, and Medicare, which are actually always going to be the same thing you used in the previous journal entry. So I'm just going to copy those down. Next we have the state unemployment taxes, so SUTA tax payable. And that's going to be for $5.40. And then we also have the federal unemployment taxes, so that's FUTA tax payable. And that's going to be for 60 cents. Now to find our payroll tax expense, that's just going to be the total of all of these payables. So that's going to be adding all of those up, which gives us $148.70 of payroll tax expense. Alright, we are finished with the journal entries. And I think the biggest thing to remember is which taxes are paid by the employee and which taxes are paid by the employer. And once you memorize those two things, you should be good to go for any of these problems.